Bitcoin is a $2 trillion asset, and it's not showing any signs of slowing down. And then beyond Bitcoin these days, there's Bitcoin ETFs. There's stocks that base their entire identity and really value around Bitcoin. For example, MicroStrategy. And then you sit here wondering, is it too late to get into Bitcoin? Or if it's not, what's the best way to get into Bitcoin? Well, hey, I'm Vosk. You're the VoskCoin YouTube channel. I believe in Bitcoin so much that I basically buy into Bitcoin all day, every day with my Bitcoin mining farm that I've been working on for years. It replaced the need for me to essentially set up repeated Bitcoin buys. But I'm not here to really talk about mining. That's just me personally. If I wasn't mining Bitcoin, I would be buying Bitcoin. But how would I buy Bitcoin? The discussion of DCAing or dollar cost averaging into Bitcoin or a stock or another asset, as opposed to smash buying, as Tomas puts it, is a really interesting discussion. So let's break down the numbers that were recently crunched on X and what's the better data? Is it better to DCA or is it better to smash buy? First off, the data analyzed looks at the annual average sums of Bitcoin acquired with smash buying 10,000 worth of Bitcoin as opposed to deploying it in equal amounts over 30, 60, and 90 days. For most of Bitcoin's history, there's a clear winner, but every 4 years that strategy loses. Looking at the actual Bitcoin amount, right? We don't care about the dollar value because on average, when we zoom out at the chart, Bitcoin keeps becoming worth more and more and more. A digital gold. Is it still a peer-to-peer currency with borderless capabilities? No middleman intermediary? And maybe it's just an inflation hedge these days, huh? Different discussion for a different day. Smash buying versus DCA. Smash buying wins 3 out of 4 years. But in 2014, 2018, and 2022, dollar cost averaging was the better strategy. And what really sticks out to me with 2022, I was there, is Bitcoin was high, low, and really low at the end of that year. 2018 was an abysmal bear market. In 2014, while interesting to run the data, I don't think it's super relevant because Bitcoin has changed so much since then. I mean, that was, 11 years ago? It's a totally different animal now. But let's break this down a little more specifically. Bitcoin spends more time going up than down. And unless you time the bear market, I don't like Tomas's words here of perfectly, but you can time the bear market well. Like when Bitcoin was trading in the $10,000, $20,000 range, to me, someone who's been in this a long time, and I'm in this all day, every day, that was an obvious buy for a long-term Bitcoin hold. So I don't actually think it's that hard to time a bear market well if you're fully engaged on this stuff. But to be honest, most people won't be fully engaged. So we probably should take that average point of view with developing an average strategy for the masses to be successful with Bitcoin. And he does bring up a great point that most people don't have the conviction to buy when there's been an 80% crash. That's when some people sell. That's when some people say, no way, it's down bad, I don't want that. And it pumps and it pumps and it pumps, and then you get FOMO and you're like, wow, actually, I want Bitcoin. I see that it's gonna keep going, right? And it is interesting, it is challenging. You literally have to go against your gut in investing, and it's weird and it's painful and it's absolutely counterintuitive and a trained skill, unless you're just an absolute DJ. If you want to mine some Bitcoin, but you don't want to do any of the work, then you may be interested in EMCD, which you may know as a mining pool that mines multiple cryptocurrencies, but they have a new product called EMCD's Hashport with just $3,990. Their dashboard gives a live hash rate report, how much Bitcoin you're mining in real time, earning forecasts, total rewards, and automatic payouts. Check out EMCD with our link out in the video description below. But to truly break down when it makes sense to DCA, it's when you can identify Bitcoin in the bear market and you have the stomach to buy, or when your cash flow arrives in small, regular chunks. salary, invoice payments, mining revenue. If you're only going to end up with a spare $50-100 a week, for the near future, saving that up could be more difficult. And then timing a smash buy there could be difficult as well. And again, if you're not really into stocks, crypto, investing, and above all, Bitcoin, just set up the reoccurring buy. I mean, there's 100 services that will offer this to you. Insert any exchange. I'm not here to push one. For example, Coinbase would love you to set up a reoccurring buy. And again, every exchange pretty much has reoccurring buy options. I mean, there's Robinhood has it, and everyone else. So, point is, it's easier than ever, and just a couple clicks away. And I agree that the exact strategy matters far less than the consistent accumulation, because if you just basically consistently accumulated over the last 10 years, you'd be doing great. And you'd also have to have a lot of conviction to buy through all those periods, and then also hold through all those periods, and also have this additional essentially disposable investment income that you could put it in here and let it ride for a long time, and you don't want or need it for other things. So maybe the biggest risk when it comes to Bitcoin is not having any Bitcoin. I will also add that I think smash buying is a little generalized in this breakdown. If you smash buy the annual top, right, that's not good. That's not good at all. And the last thing I want to add beyond smash buying and DCAing into Bitcoin, and I touched on it earlier briefly, you can mine Bitcoin. What does that take though, right? You can buy a full-size Bitcoin miner right now, current generation, for like $3,000-4,000. And depending on your electricity rate, this can be a lucrative endeavor. For example, at the time of recording this video, arguably the best bang for buck miner is the Bitdeer Seal Miner A2. 16.5 watts or joules per terahash of efficiency. That's absolute current generation there. It would mine about $16 in Bitcoin per day, rounded up there. And if you had a 10 cent per kilowatt hour electricity rate, it would cost you $9 a day to operate. So we have to talk about the capital to get that miner, but you're essentially spending $9 to get about $16 of Bitcoin. Well, that sounds like a winning equation. I pay 7.5 cents per kilowatt hour, so it only cost me $6.71 to get about $16 of Bitcoin. So I'm making out, about $9 of profit there. And you can head over to mining now and play around with your electricity rate and the projected mining returns there. You can also grab a miner from ASIC Marketplace if you'd like one. We're an affiliate with them. We worked with them for years. It's a good experience, and I just bought several miners from them to further expand my Bitcoin mining operation. But beyond all of this, I think the ace play for the average person mining out of their home would be to integrate solar. For example, I set up solar in my house, and I did a bigger solar array than I needed, all with the simple concept in mind that I want to completely zero out my electricity bill, because I pay my home electricity bill with my tax money. Government scams me on that. And again, I said a bigger array to generate enough power to run one full-size Bitcoin miner 24/7, 365, which at my residential electricity rate of, depending on the time and everything, basically 14 cents. Running one of these would cost me $12.50 a day to run, but I'm generating that excess power to be able to do that. So my daily cost to run that is $0. So I'm mining $16 of Bitcoin, and I am putting that into my pocket. Obviously, I have the capital investment here of the mining rig. I also have the investment of the solar, but at some point, I'll break even on the mining rig. At some point, I'll break even on the solar array, and then I'll be able to finally compete with the government and have my own little money printer. If this Bitcoin investing and passive income interests you, make sure to subscribe to the VoskCoin YouTube channel. That's all I've got today. Again, I am Vosk, and I appreciate you. Good luck out there. And remember, if you're not playing, you'll never win. For whatever that's worth, we close this video out in style with our CIO, our Chief Investing Officer, Tails Vosk, because we take C titles with the utmost importance here. And we run 10 seconds of this cutie pup on every video.